What is going on, everybody? Welcome back to Trading Learning 101. Today, we're going to talk about a very important lesson, knowing what exchange your stock is trading on. We're going to go over multiple examples. This video is going to show you the importance of paying attention to details in the stock market as a day trader, swing trader, investor. But real quickly, if you haven't already and you're brand new to this channel, hit that subscribe button. Join the Trading Learning 101 community where we all grow as traders and investors, and go through all of my videos. Check it out. I have over 400 videos on all topics when it comes to day trading. Educate yourself. The more you know, the more advantage you have as a trader in the stock market against somebody else who doesn't study and just gambles away their money. To me, this is not gambling. This is my job. I take this seriously. I study the past, and this is how I'm able to consistently and profitably make money every day, every week, every month as a trader. And I'm sharing with you guys how I do this. Subscribe to my channel. Check out the content that I've created the past 3 years. I've been a trader in the stock market for over 5 years now, and I don't plan on going anywhere anytime soon. I plan on being here for a long, long time. So again, what are you waiting for? Subscribe, join the community. We're growing more and more every day. I want to thank you all for all of you who have subscribed and supported me in the past. We're going to keep rolling going into the new year, 2021. Let's all kill it, make that money, and be our own bosses. Trade wherever you want and bring in your own income. Nobody wants to work for somebody else. Be your own boss. Put that time in, study your butt off, and get on that grind and make sacrifice, because sky's the limit in the stock market. Let's jump into it, guys. All right, so knowing what exchange your stock is trading on. This is so important, and nobody ever talks about this. And I've seen this happen time and time again. For this example, and I have a list of stocks here that we're going to go over, and I have multiple pictures that I'm going to show you guys. And it's all about noticing what's happening in the market over and over and over again, and recognizing it. And then this is how we profit as traders. We recognize patterns, we pay attention to details, we learn from our mistakes, and we carry forward. This example right here, UUU, was gapping up pre-market. The previous day, it was at $3 a share. The next day, it's gapping up, hitting a high of $14.50 with no news. So there's no catalyst pushing this stock up. And this stock is trading on the AMEX, which is the American Stock Exchange. So the stock's gapping up pre-market, no news. And as soon as the stock market opens, this stock runs from 11 up to $13.50, gets halted, goes into a 5-minute halt. They reopen it at $14, and then it slams down to $12.32. And then from here at 9:37, they halt this stock for 2 hours. They halt this stock. And when they reopen it, it gets a 50% haircut, and they open it up down here at $7.50. So imagine that. You're in on this stock and it's halted. Now you have to wait for 2 hours for this stock to reopen. You got in, let's say at $13.50, way up here, and they reopen it 2 hours later down here at $7.50. That's a $6 per share loss. You're holding 1,000 shares, stock gaps down $6. That's a $6,000 loss. That's going to hurt. And also, this is the risk of day trading stocks that are up with no news at all. You have to think there are a lot of chat rooms out there that love looking for these low float stocks, loading up on them the next day. And let's say this pump and dump group, this chat room, has 5,000 people in their community. The guru loads up on the stock the day before. The next day, they announce it to their 5,000 people in their chat room. Everybody buys it, pushing the guru up in profit. And then the guru unloads on all of his followers right when the market opens. Not saying that this happened with this example, but it happens with many stocks. Pump and dumps. They used to call them boiler rooms back in the day. These scammers would rent out offices and fill them with telephones, and they would just call people all day. Doctors, lawyers, single parents, people at home, small businesses, to try and sell them a stock idea, pump the stock up, and then unload it. Then we went from phones to email promotions. All these gurus put out email promotional alerts. This was really big in the OTC markets, pink sheets. CEOs at these companies would pay a promoter either cash or they'll give them 1,000,000 shares, and then the promoter would pump the stock, and then everybody in the company and the promoter would unload the stock a week or a month later after promoting the stock in the company for days, weeks, and even months. And it still happens today. So back to UUU. After this reopened up, the stock just got destroyed and went all the way down to $4.50. Pretty scary if you're trading this and it gets halted for a couple hours. And again, the risk of trading stocks with no news. The SEC halts these stocks and they'll call the company and they'll be like, hey, why is your stock up when you guys have no news out? The company responds to the SEC, I don't know. We have no news that we recently put out. We don't have any products that we're about to be releasing. We don't know. So the SEC says, okay, so if there's no reason for your stock price to be up, gap it down 50% and reopen it. And that's what happens. And I see this happen a lot with the AMEX and the NYSE, the New York Stock Exchange. It doesn't happen as much with the Nasdaq. You have to think, each of these exchanges have different policies. The Nasdaq has their own policies. The New York Stock Exchange and the AMEX, American Stock Exchange, have their own policies. Let's look at another example. Recently, we had RHE. This is on the AMEX, the American Stock Exchange. You could see when I zoom in right here, there was no volume on this stock. This day or this day right here, no volume at all. Then, out of nowhere, this stock just starts ripping all the way up from $1.75 all the way up to $15.75. No news at all. And look at this big volume spike right here. Big volume spike. Stock put out no news. It's on the American Stock Exchange. And if we zoom in on this, it ran all the way up and then it topped out at $16 right here. Then they halt the stock. They halt it at 11:50. They reopened it 3 hours later at almost 3 o'clock. It was at 16. They reopen it at $5.70. Pops up to 7.32 and then it sells off for the rest of the day. Again, imagine being in this, buying it at $15.75. And you may be saying right now, Dave, you're crazy. Why would I chase and buy a stock up this high after it ran up so much? You'd be surprised. You'd be surprised who would buy this stock up that high. It's called emotional trading. People who don't really know what they're doing, they see a stock just ran up $16. They instantly look and see, wow, look at how much money I could have made holding on to this stock. This stock can go to $20, $50, $100. I'm buying in now and I'm loading up. You'd be surprised people that do that, and they do. They do that. Look at all the volume increasing and pushing in higher and higher as the stock price goes up higher and higher. It's human nature. It never changes. This is greed at its finest right here. This is what I say about my stock scanners. If you're new, I wouldn't pay attention to stock scanners because you're going to be chasing after stocks when they hit those scanners. Learn how to actually read charts and understand how stocks move before investing in tools like stock scanners, high of day momentum scanners. Yeah, they're great, but somebody who's new, learn the concepts and the fundamentals first. So you would have gotten destroyed trading RHE here. Let's take a look at another example. Ticker symbol ACY, listed on the American Stock Exchange. You see here, the previous day, there was no volume on this stock. The stock did push up in price. This was probably an inside job. Some guru loaded up the day before, right here. And then the next day, right here, the guru pumped it to his community, and then it pops up on everybody's stock scanners, and everybody chased after it, and things just got out of hand. Again, ACY had no news, and the stock ran from $6, $6 right here, all the way up to a high of $38. Just insane. That's insane right here. And look what happened. The SEC finally halted it, contacted the company, asked the company, why is your stock up? The company says, I don't know. I mean, we didn't put any news out. I was just about to sell all of my shares myself. I'm rich. The SEC says, not today. We're gapping this bad boy down 50%. Then from $38, they reopen it at $16, and it slams down to $11. And then slowly but surely, it just fades off back down to $6. And yeah, this did get a good bounce on it, but what I want to focus on is this section right here. This run up, and then they reopen it and gap it down. They halted it from 11:05 all the way to almost 3 p.m. Eastern time. So they halted this for 4 hours, and then they reopened it with a big gap down. All these stocks that I've shown you were listed on the American Stock Exchange or the New York Stock Exchange. Now, let's take a look at some stocks that are listed on the Nasdaq exchange. First one we're going to look at is IMTE. It's a really, really nasty looking chart, but I want to make something clear with the Nasdaq stocks here. The Nasdaq's policies are totally different than the NYSE and the American Stock Exchange. The Nasdaq will rarely halt the stock and call a company to ask why their stock price is up. It happens. Don't get me wrong, but they don't do it as much as the American Stock Exchange and the New York Stock Exchange. The American Stock Exchange and the New York Stock Exchange, they have more stricter policies than the Nasdaq. The Nasdaq is all ran by computers. The New York Stock Exchange and the American Stock Exchange, they still have people, humans, there monitoring stocks along with computers. It's not all digital yet, okay? So IMTE here gets a run up from $4.50 all the way up to a high of almost $7. But you see, they didn't halt the stock for hours at a time. What they kept doing was they kept halting the stock for 5 minutes and then reopening the stock. They're called volatility halts. The Nasdaq is notorious for having volatility halts. Even though this is a nasty looking chart, it's different from the other charts that I've presented to you earlier in this video. I'd much rather trade stocks that are having volatility halts like every 5-10 minutes rather than having an exchange halt a stock and have to wait around 2, 3, 4 hours and then them reopening it at 50% lower. That's crazy. That's insane. That's way too much risk. And don't get me wrong, everybody's trading styles and strategies are different. I am just presenting to you in this video what I know and what I've found and sharing it with you all. Even though this is nasty right here. Imagine being in this when it got halted right there at 620 and then they reopen it at here and it instantly slams down and gets halted again. And then they reopen it and it slams down again into another halt from right here to right there. Just nasty. But let's look at another Nasdaq stock. We're going to look at TCCO. I will point out this company did put out earnings a couple days ago right here. But after that, a couple days later, it got this big gap up right here. Let's zoom in on the action right here. So now that we've zoomed in on this action, you could see, and I'll zoom in here. Yes, again, the chart is ugly looking. Some people may say, I'm not trading a stock that looks like that. And some people would trade a stock like this. I mean, if a stock has range and prices are moving, there are people out there that will trade it. And when you break it down to the basic statistics, all this stock was doing all right here was in a range. Back and forth from $9 up to 12, back down to 9, up to 12, back down to 9, up to 12, down to 10, 12, back down to 9, little pop, and then it finally broke through the range. That's all this stock was doing right here, was going from a range back and forth and continuously just getting halted over and over and over and over again. That's all it was. So again, TCCO and all the Nasdaq kept doing was doing volatility halts on this. Stock would move from 875 up to 1020, runs into a volatility halt. They'd halt it for 5 minutes right here. Then they'd reopen it right here and then run it up. Runs into another volatility halt. Then they'd reopen it right here, gets a quick pop, and then they slam it down, runs into another halt. Open it back up, stock slams down, and then they halt it again. When it slams all the way down right here, they reopen it, runs up, then this explosion right here, they halt it again. They reopen it, run it up, halt it, reopen it, pops up, halt. They reopen it down here, and then they rip it all the way back up. But you just see how the stock's moving, and you can study these charts, but I'll tell you, when it's all happening real time, it's totally different than just sitting here and studying these charts. Let's look at another example here on ticker symbol AIRT. We'll zoom in way back here in this price action right here. You could see the previous day, there was no volume going in on this, no price action at all. And then the next day, just randomly just starts ripping up from $10 all the way up to $42. Let's zoom in on that day there. And this is what happened on this specific day. And again, this is listed on the Nasdaq right here. They did have one long period of a halt, or actually a couple. One right here, when it got halted, it was halted for from 9:35 all the way to almost 10 o'clock. So for a half hour, it was halted right here. They reopen it, rips up, they halt it again from just about 10 o'clock, and then they reopen it at 10:40. So it was halted for 40 minutes. They reopen it, slam it down, and then they gets halted again right here. They halt it for 5 minutes, reopen it, rip it up, halt it again. Gets halted for 5 minutes. They reopen it right here, gets a quick pop, and then they slam it down right there, gets halted again. And then this happens over and over and over again, just nonstop getting halted right here. If this was on the AMEX or Nasdaq, this wouldn't happen. They are not going to do this all day. They're going to halt the stock for hours. They're going to call the company and say, listen, what's going on? And then that's when you can get into your T12 halts, where they can halt the stock for days. They can halt them for weeks, months. I've seen some crazy T12 halts. LMFA, they've halted for weeks and months. A newer IPO stock, NK, I think it was, but it was like the Starbucks of China. I can't remember what it was, but they did a T12 halt on it, and it was halted for a couple months. And then when they reopened it, it was at like a 40 to 60% discount. And then the stock went, just people lost interest in it. The last part of this video, what I want to show you guys are different halts that I've taken from the past and just saved in my photo library. For instance, ABIO here. I can guarantee you majority of these pictures are all Nasdaq stocks. That's the importance that I want to try to preach in this video. Pay attention to what stocks you're specifically trading. What exchange are they trading on? For me, I only try to stick to trading Nasdaq stocks. Sometimes I will trade American Stock Exchange, NYSE stocks, but only if they have news and a catalyst driving volume into the stock. Because majority of the time, if a NYSE or Amex stocks is just ripping with no news, they're gonna put a halt on it, and it's gonna be halted for hours, and then they'll open it up 50% lower or more. So you have to be careful. And all of these stocks right here that I'm showing you right now, these are all Nasdaq's halts, and all they do are volatility halts. Yeah, they're still risky, but once you understand and see these volatility halts happen on these Nasdaq listed stocks, it happens over and over and over and over again. You just get more comfortable with them. And they are designed to help the investor because prices are moving so violently and so fast. They pause trading for a moment for the investor and the trader to think, because things can get out of hand very quickly and your emotions kick in and you could make mistakes that you'll regret later. But I'm just going to run through all of these charts right here, and you could see they run up BPTH here. This was an epic runner a year, 2 years ago. I think it was a year ago. This stock ran from like $5 all the way up to like $150 in 2 days. It was insane. But did they do hour-long halts on it? No. They halted it for 5 minutes, 10 minutes, and then they reopened it and let it keep going. I mean, look at it here. It ran all the way up, and then they just kept halting it for 5 minutes and reopening it. And you're getting good bounces on this. I mean, it's tradable. Again, CHK. You could see the halts all right here. They're not halting it for long periods of time. They're just doing volatility halts, reopening it, and letting price action and volume just surge into it. Some more examples on GLSI. This was a recent runner. This was insane, running from $5 all the way up to $162 in 1 day. And this is traded on the Nasdaq. And you could see all they did throughout the day was just simple little volatility halts. They didn't ruin it for everybody. The Nasdaq didn't call the company and investigate, hey, why is your stock up 16,000% right now? They didn't do that because they have different policies compared to the New York Stock Exchange and the American Stock Exchange. I would say the Nasdaq isn't as strict as the New York Stock Exchange and the American Stock Exchange. GNUS, I mean, volatility halts right here, all right here. KODK, this was a big runner last year. I mean, just look at this, from $18 all the way up to $60. But then, look at, They ran it all the way up, and then once it started getting some red candles right here, they halted it at 50, and then they reopened it down here at $30. And then they ripped it all the way up, back down, and then they grinded it all the way back up. SCPS is another example. Look at all of these volatility halts here. All right here, ran all the way up to $48. And then they halted it for a half hour. They reopened it back at $30. And just insane price swings on this. I mean, just crazy what's going on right there. Be careful trading these stocks that are halting like this. This happens all the time in the stock market. And I see a lot of new people come in, they get freaked out, and they're just not used to seeing stocks like this. It happens all the time. And there's multiple people in the stock market that have different strategies. Everybody trades what they like. So study the past, stick to what you feel most comfortable with. Some people don't like trading stocks that get halted like this. Some people love trading stocks that get halted like this. It depends from person to person. I'm not trying to give you any advice for trading stocks like this. I'm just only trying to educate you guys and show you what these stocks can do in the stock market and on different exchanges. Again, guys, if you're new to the channel, hit that subscribe button. Join the Trading Learning 101 community where we all grow as traders and investors. That's going to wrap it up for this one. I hope you guys enjoyed. Hit that like button. And as I always say, have that patience, have that discipline, and study, study, study. Later.
The most valuable commodity I know of is information. We wish you